Treasury has published a proposed set of laws that would guide the two-pot retirement system. It's due to become effective in March next year. In fact, to discuss this some more, we are joined by personal finance columnist Maya Fisher-French. A very good morning, Maya. Explain what the two-pot system is and what it will mean for those who are, because these are questions we're getting across the socials as well. What does it mean if I withdraw the money, the 1/3? How is it calculated, and why is it capped at 25,000 Rand? These are just some of the questions.
Absolutely. So let me unpack this for you. The document that came out on Friday from National Treasury is really an update. We've had information on this for quite some time, but they are obviously filling in the gaps to answer all of these questions. So just to give a brief overview, this is a new retirement system. We're calling it the two-pot system because 1/3 of all your contributions, retirement contributions from the 1st of March, will go into a savings pot. 2/3 will go into what we call the retirement pot. So if you have a 1,000 Rand contribution, 333 Rand will go into the savings, 666 Rand will go into the retirement pot. You will be allowed to access your savings pots once a year, once it reaches the amount of 2,000 Rand or more. But you may never, ever, ever touch the 2/3. So that will go on until retirement. And what's been very, very interesting for me is to see some of the analysis that's come out of the industry of the impact of this on retirement outcomes. Because as you know, we have a big crisis in South Africa around retirement. People come to retirement, they don't have enough money, usually because they've been cashing in along the way. So they compared, say, a 25-year-old starting work, who would have normally perhaps every 7 years cashed in their pensions or their retirement funds until the age of 50, when most people stop cashing it in because they stay in their same job till retirement. What would the outcome be if that 25-year-old had put 1/3, accessed 1/3 as they were allowed to, but kept 2/3 to retirement? And do you know that the outcome is 5 times better? We are talking multiples. We're talking 8 million versus 2 million. It's unbelievable the sort of impact that this is going to have on retirement outcomes. I think it's a very, very positive move in terms of trying to secure retirement for people, but at the same time acknowledging that people want to be able to access for emergencies, please, not for lifestyle issues, that savings pot.
And Maya, what are some of the misconceptions that people need to be aware of? I mean, another question that I saw was someone asking, does this affect people within the government sector only, or does this also affect people in the private sector? What then of people who are freelancing, etc., etc.?
Absolutely. So let me start off with a big misconception, and that is, and I think you alluded to earlier about that 25,000, there seems to be a huge misconception that people can access 1/3 of their existing pension fund from the 1st of March. That is not true at all. You've got to almost think of it that this pot, this new retirement pot, will start from zero. Your balance, you'll have your existing, what we call the vested pot. It's confusing, lots of pots. But you're going to have a vested pot, which is the balance up till the 28th of February, 2024. But from the 1st of March, you've almost got to think you're going to have another fund, if you think about it like that, that's going to start from zero. And it's that fund that's you're not going to be able to access 1/3 of that because it's worth zero. So what National Treasury has said is, recognizing that people may need access, to some funds now, is they've said you're allowed to seed your savings pot from your existing vested pot, but there's a big limit on it. So they're saying you can seed up to 10% of the value of your existing pension fund, capped at 25,000 Rand. So if you say, for example, your current value is 100,000, 10% would be 10,000. You could put that into your savings pot from the 1st of March and effectively access it. But if your pension's worth 500,000 Rand, then your 10% would be 50,000. You can't take that. You can only take 25,000. So that's very important. I think there's a lot of people who think they're going to pay off their debts, they're going to take the 1/3. It's not. It's going to be very limited to 10% or 25,000, whichever is the lesser. And then in terms of the government employee pension fund, they are expected, so this is definitely for the private sector. This is, the industry is trying to get its systems ready for the 1st of March 2024. The government employee pension fund is required to be part of this. I did communicate with them yesterday. They have not been able to confirm with me whether they will be ready by March 2024. Remember, everybody is going to have an opportunity to comment by the 15th of July on these proposals. So they weren't able to give me confirmation as to their date. But yes, they will be following a very, very similar system, but a little bit different because it's a defined benefit fund, so they'll have to look at years of service and all sorts of other things. So I think that is going to be a little bit more complicated. But yes, they are going to be part of the system as well.
Maya Fisher-French, thank you so much for your time this morning. Of course, that elusive deadline of 15 July is exactly a month away if you count today, in as far as the date. Today is the 13th of June. So you've got some time still to send in your comments and make sure that you are heard, because the March 24 first, when this is implemented, you will have no say at all whatsoever.